Hi everybody, so we're going to continue with chapter 2 this week, and we're going to go over chapter 2 and chapter 3 in this module for the week, and going to have another great discussion. By the way, thanks everybody for your posts about sustainability. Really loved expanding that topic, and I think it's very exciting to learn more about that as we're learning accounting, because sustainability is something that you manage and measure, which is exactly what financial accounting is. So the underlying methods to do it are the same. That's why I feel like it's actually accountants taking the lead in a lot of the sustainability efforts. And the big four accounting firms are also taking the lead on auditing those efforts. So it's very interesting, and we'll continue with that. It's just a side piece, and I hope it gives you a nice edge when you go out there in the market and look for these fashion positions or management positions, and you can find yourself in a lot of interesting conversations with management about these pieces, as clearly you all have contributed to the discussion already in our class. So thank you very much for that. So this piece, actually, we're jumping right in. I love how this book does this, is we're kind of jumping in and putting the kind of horse ahead of the car, or the cart ahead of the horse, with the way of kind of going right into the product of what we're trying to achieve in this course, which is how to read financial statements, how to analyze financial statements. And with that, we're going to go right in here to talk about today how financial statements are comprised. So I wanted to hit a couple of definitions, a couple of major points, so that when we go over our major example in a little bit, you can really see and have a little exposure to each piece of the puzzle before we go directly in the puzzle. So in terms of financial statements, we're basically, the definition of financial statements is you're basically presenting the financial position, the financial condition, and the results of operations of a business. That could be broken down further, but in essence, it's what do you have, what do you owe, how much have you spent, how much have you made. And I think it's much easier to look at, we could do it on a personal level. It'd be much easier to think about it. What do you owe on credit cards, student loans, what kind of assets you have in terms of cash, investments, property, stock. That's your balance sheet. And on your income expense side, what have you made this month? What have you spent this month? What do you need to pay in the next 30 days? What do you expect in the first 30 days? That's your AR and AP. And your cash is very important. As we get deeper into it, in reality, accounting has really two pieces. One piece is like we're reporting all this information. The other piece is keeping track of cash. And I got to tell you that in reality, in the professional, I'm sure most of you know and have seen this in practice, but on just simply accounting, the job of the accountant is to basically keep track of cash, which in a large company takes a huge amount of resources just to understand every single item that hits your cash and actually be aware and book everything that changes your cash number and have confidence that you've booked everything. That's the other one. The other piece is now classifying all those transactions that you did book, knowing you booked all of them, and that's where you get into your balance sheet, your earnings, your cash flows, and investments and distributions to owners.